Welcome to your Stock Sense morning brief for Tuesday, December 16th, 2025. I'm Malik. And yesterday, the Pakistan Stock Exchange delivered a notable rebound, buoyed by a surprise move from the state bank. The KSE 100 index not only regained ground, but closed firmly in positive territory. Yesterday, the KSE 100 index wrapped up the session at roughly 170,700 points, climbing by nearly 900 points or about 0.5%. This positive momentum followed its previous close of just under 169,900. Market breadth was strong, with 239 advancers comfortably outnumbering 202 decliners, while 45 scrips remained unchanged. Trading volumes on the main board were robust, seeing over 900 million shares change hands with a total value of nearly 48 billion rupees. The index demonstrated resilience, maintaining its position above key levels amidst this renewed buying interest. Turning our attention to sector performance, oil and gas exploration companies were a significant catalyst, contributing positively to the index's upward trajectory. However, not all sectors shared in the gains. Automobile assemblers acted as a notable drag on the market, experiencing downward pressure. Similarly, investment banks, investment companies, and securities firms also registered a negative impact, pulling the broader market down. This created a somewhat mixed picture, with energy stocks clearly leading the charge. From a technical perspective, the market shows a clear positive bias. A consensus of various moving averages, including both exponential and simple moving averages across different timeframes, indicates a strong buy signal, reinforcing the prevailing upward trend. While specific oscillator readings were not available, key pivot points offer further insight. The KSE 100 established a classic pivot at around 163,600 points. Looking ahead, immediate resistance is observed just over 100,000 points, while a crucial support level stands at roughly 160,250 points. These levels will be important for traders to monitor in the short term. In significant economic and market news, the State Bank of Pakistan made a surprise announcement yesterday, reducing its policy rate by 50 basis points to 10.5%, effective today, December 16th. This move signals a strategic shift towards supporting economic growth, with the Monetary Policy Committee noting that inflation has remained largely within its target range. Separately, Finance Minister Mohammad Aurangzeb underscored Pakistan's strategic transition from aid-based support to a focus on trade and investment, aiming to bolster economic confidence and foster sustainable growth. However, a more immediate concern is the ongoing goods transport owners' strike in Punjab. This industrial action has brought numerous public and private sector development projects to a standstill due to the suspension of construction material deliveries, potentially impacting economic activity and related industries. Shifting focus to institutional flows for yesterday, December 15th, foreign institutional portfolio investors, or FIPI, were net buyers, with a modest net inflow of about $165,000. Conversely, local institutional portfolio investors, or LIPI, registered as net sellers, with an outflow of roughly $165,000. Drilling down into specific investor categories, mutual funds stood out as the strongest net buyers, injecting over $3.2 million into the market. Other notable buyers included broker proprietary trading, with nearly $1.2 million in net buyers, individuals adding about $870,000, and overseas Pakistanis with over $700,000 in net inflows. On the selling side, insurance companies led the outflows, divesting about $1.7 million, closely followed by companies also selling about $1.7 million. Banks and DFIs were net sellers with over $1.1 million in outflows, along with other organizations selling nearly $1 million, and foreign corporates offloading over $500,000. This indicates a diverse pattern, with local mutual funds and individual investors actively accumulating, while other local institutional segments and foreign corporates showed selling pressure. My take on yesterday's market activity is that the unexpected policy rate cut by the State Bank of Pakistan is a pivotal development. This reduction signals a clear intent to stimulate economic growth, and it could provide a significant boost to interest rate-sensitive sectors, such as highly leveraged industries and consumer financing. The positive market response reflects this sentiment. However, the simultaneous goods transport strike in Punjab presents a counteracting force. This disruption to supply chains and the halt in construction projects could temper some of the optimism generated by the rate cut, particularly for industries reliant on logistics and raw materials. The coming days will be crucial in observing how these two contrasting yet powerful economic forces, monetary easing versus supply-side disruption, interact and shape overall market direction. That concludes your Stock Sense morning brief for today, Tuesday, December 16th. Thank you for joining us. Please remember the insights and data shared are for informational and educational purposes only and do not constitute investment advice. Always consult with a qualified financial professional before making any investment decisions. We wish you a productive trading day, and we'll be back tomorrow with another update.